All right, Tanner, welcome to the show, my friend. I heard your podcast episode on Bigger Pockets like 2 weeks ago when I was on vacation, and the title completely got me hooked. And I watched the whole video and I could not believe the story you shared on there with the subject 2 deal gone bad. So I'm like, I got to hit this guy up. He's a stranger. I don't know him. He doesn't know me. See if he wants to come on my show and talk about that. So thank you for agreeing to do this. And let's just get into before the deal. How did you get into real estate investing in general?
Yeah, it's a good question. And I appreciate you having me on. So, honestly, my journey into real estate is pretty basic, probably similar to 70% of people. I read Rich Dad Poor Dad. I got into Bigger Pockets and I was hooked. So, that's like the gist of what caught my attention. And then, one thing we do have in common, you live in Seattle right now. That's where I was born and raised. Once I started getting involved in the Facebook communities and meeting some of the players, that's when it really got fun for me. That was about 6 years ago, and that's like a short version of how I got started.
So you started in Seattle and then eventually you moved over to Salt Lake City, Utah. You break in the market there. You have to obviously restart your network and the marketing and everything. When did you run into this subject 2 deal from hell? I want to hear the whole thing from the horse's mouth. I'm going to probably have some different questions for you than the Bigger Pockets episodes.
So, I sold my house in Kirkland, Washington, for those that aren't aware, and we did really well on this flip. I think we made like 350, 380 on it or something. It was a live and flip. I was putting all my cash into it. I had like half a million in the bank. This is the most money I've ever had in my entire life. My personality is when I have money in the bank, I want to put it to work. So I sold my house in Kirkland. I come to Utah, brand new market. I
Yeah.
don't know any of the players. And this is right around when interest rates started doubling, right?
In like mid year 2022.
Exactly. I think, yeah, it was like September is when I moved of 2022. The market was shifting drastically. In Seattle, the strategy that I was used to, and Thashna Nguyen was one of my mentors. He's a big player in Seattle. His is like the Burr method, right?
Yes.
So you go in, you fix it up, you refinance. Rates are great. That's all I knew, and it was beautiful. Now, when rates are 6, 7%, it's a little bit harder to do that. So this creative finance buzzword was looming over me, and that was going to be my next acquisition. I did very little research on it. And again, big mistake there. I had a lot of pride in myself as an investor, which 2020 to 2022, anyone was an investor, everyone was making money. So I was one of those babies who thought I was sick. So I had this cash and one of like the first people I was networking with in Salt Lake area. This guy claimed he was a big player. He was doing a lot of deals on the finance side. And he said he had this deal. And so honestly, from that lunch, I trusted him. And if you look at the Bigger Pockets episode, like that was obviously my biggest mistake there, was trusting this guy. He had the deal, 3% interest rate, creative finance. I jumped into it way premature. Didn't even know the difference of creative finance strategies, right? And so to me, this is all bundled under the same umbrella.
So creative finance, basically it's subject to, which is taking over a mortgage, or an owner financing is when the owner basically gives you the mortgage. So you just learned about this after, doing some bird deals in Seattle and flips and, lower interest rate climate. So now you move to Utah, just to give like the listeners like the picture. Now the rates have doubled, if not tripled. And now you're like, okay, in order to keep making this make sense, I'm going to need to learn creative finance in order to keep hitting my goals. So that's why you broke into creative finance, right?
That's exactly right. Because to me, my metric was 8% cash on cash. Like
Okay.
that's what Bigger Pockets ingrained in my head from early on in my career. And so I couldn't find that on the traditional sense. It was hard to do even in 2020, 2021, 2022. And now I was like, no shot. I'm finding an 8% cash on cash. And so that's kind of what got me into creative finance in general.
Got it. So you buy this property from this wholesaler. I know there's more to that. Like I know there was an agent involved. You get this house. Let's just go through the hypothetical numbers that were presented to you from this investor, and then we'll just keep unpacking the deal.
So it was 450,000 purchase price, a 3% interest rate, flat 3%. And I was going to refinish the basement. I did finish the basement. And so my rents, this is in Salt Lake. And now I don't even know off the top of my head, but it was like a 14% cash on cash.
Wow.
So whatever that equates to.
So at the 450 buy price, was that taking over the debt at a total purchase price of 450, or was it 450 cash layout and then you're taking over someone's loan above that?
It was a total of 450. So my
Okay.
down payment was 110 and this was a hybrid deal. So there was a note with the seller on
Okay.
top of taking over the loan.
Got it. Okay. So the equity in the deal, the owner financed basically.
Exactly. Well, besides my 110. So let's say it's 220 was the underlying mortgage. I put down 110, puts us at whatever the math is, and then the rest was financed with the seller.
Okay. So basically the seller got relieved from the mortgage payment. They got basically 100 grand in their pocket. And then they did a second that would be a junior mortgage of like the balance that you're making payments to them on. And the rate was 3% on the senior mortgage. What was the rate that the owner was charging you on the second subordinate debt?
Yeah, it was a 3% as well.
Oh, that's a smoking deal, dude. Dude, that's
Everything looked good.
yeah,
Everything looked
that
good.
sounds great to me, man.
So even on top of that, something I didn't bring up in bigger pockets, and another reason that I was excited about this is like I came from Seattle. The Dadu plays are massive,
Huge.
which for listeners, like Dadu is just building a house in your backyard and you can condoize it, you can sell it off. It's a massive opportunity. Salt Lake's laws are leaning that direction. If you're an owner occupant, you can build a Dadu in your backyard. You cannot condoize it, but you can rent it out. So no like investors can take part in this. To me, that says it's coming soon, right? There's none of applications coming in for these dadus. Why? Because not a lot of owner occupants are going to take part in this. It's very much so like investors take advantage of it. So there was a detached garage. Keep in mind, this was built in 2014. So the bones were great. There was an alley in the back with 1,000 square foot detached garage. So the conversion on that dadu would have been so freaking clean
Yeah.
when the laws allowed for it, which are coming soon. Like they just announced another one, another law change. Like we're getting so close to it. And so I was excited about the deal to say the least.
When you say condo off, you mean like you could build a dadu in your backyard in Seattle, and essentially unit A is one piece of property, unit B is a separate piece of real estate with a different APN that you could sell off completely. That's what you mean by this, just because the listeners might not know what that means.
Exactly.
Okay.
Exactly right.
Yeah. Okay. So you buy this, numbers are great. You got 3% rates, got 100K down, but you sold your house in Kirkland. So it's all good. You close on the house, the wholesaler makes some money, the agent makes some money, the seller gets some money. What happened next?
Yeah. So, I mean, I refinished the basement, put 70 grand into finishing the
Oh,
basement.
man.
It was unfinished. So I created 2 units. So I did a
Okay.
full base. I did a full kitchen. It was a 3 bed, 1 bath. And that's how I got the 14% cash on cash.
Got
Like
it. I see what you're saying.
massive opportunity in finishing the basement, which I was allowed to do. Right.
Did that
Um,
become a two-family property at that point? When you finished the basement,
exactly.
you legally it became a duplex essentially.
Yeah.
That's a great dude. That just sounds like a great deal. I'm like, damn, dude.
It was great. So then obviously after that was finished, I put renters in there, rented for way more than I thought, rented faster than I thought. Cash flow is coming in. Like 2 months later, I kid you not, 2 months later, I get a picture from one of my tenants with the notice that it's going to the auction. And they sent it to me. I had no idea. So now I'm obviously freaking out, calling the listing agent, calling the wholesaler, like what's going on.
Was it house listed on the MLS or was it an off-market deal?
I
First,
bought it when it was listed. Like, it was brought to me by the wholesaler. He had got it under contract when it was listed.
I see what you're saying. So you got the notice saying it's go to the auction. What happened after that?
Yeah, so this is I start obviously wholesaler, listing agent, I'm pissed. And I say I'm pissed, but like hindsight 2020, this is 100% on me. Like I should not have done this deal. There are so many like if I would have just done this, if I would have just done
Yeah.
this, I would have never jumped into this deal. So I'll preface that too, but I am calling them and they're like, "Oh, this happens all the time." Like I've been able to save a ton of these. And so I'm like obviously learning this creative world as I am knee deep in it, mistake 1,000. And so I'm like kind of just following them. From their instruction, I was told not to reach out to the attorney. That's contact information was on Like, I had gotten my own attorney at this point, but
Oh,
I'm not allowed, per their advice, to reach out to the attorney's contact info that's on this letter. Because then they're like, "Oh, then they'll definitely know you took over, and it's a mess." Because in a sub-2 deal, the bank you don't want the bank to be aware.
yeah, there's a due on sale clause, which is like in every mortgage package.
But obviously, they were more than aware at this point. So we convert to a contract for deed, which means I give over my ownership, right? Like I now have only equitable interest versus having the deed in my name,
Sure.
converting to a contract for deed, which they say is the solution. Like the bank can't foreclose on me if it's still in.
In the owner's name.
Exactly. So that was the solution that we went after. So a notary came to my house, we signed it, sent it back. And so I'm like thinking we're good. I'd probably say a month later, and like, who knows if these timelines are exact. This is all a blur to me at this point. But like shortly after, we get another letter that's saying it's going to the auction. Here's the date.
Oh my lord. Are the
So
tenants
now,
they're probably freaking out because they're what the hell's going on here?
oh, they're pissed. And I don't remember how much I talked about this on Bigger Pockets, but they are threatening to sue me as well. And I completely get it on their perspective. Like
Yeah.
I would be livid. And if you try and explain what's going on to someone that has no idea about real estate investing, like imagine how stupid that sounds. Like, hey, I bought this house, but I'm not technically
The
the
owner.
owner now. So I'm trying to explain the solutions, how I'm doing this. It just sounds terrible. And so now they have an attorney, their attorney is reaching out to me, and I'm just like drowning in all of this. I'm trying to save my 180 grand. I'm trying to save myself from not getting sued. I'm just like, Jesus, take the wheel. So it goes to the auction. Now my attorney, it was, I'd say on the first letter, I'm starting to talk to attorneys, but I'm not like as panic mode as the second letter because the listing agent and the wholesaler gave me their word that this happens all the time, that we're all good. So the second letter, now I'm like full on
Something's wrong.
frantic. Yeah. So the attorney's like, yeah, you got to get in touch with their contact information. You got to figure it out. You got to talk to the servicing company. You got to talk to all parties. And so that's what I did. And that's when I found out that even in a normal sub-2 transaction, usually the due on sale is like, "Hey, you gotta pay this off."
We need to get paid off. We're initiating a foreclosure. You could sell the asset, you could refi the asset, pay it off in cash.
Exactly. So now to me, that's where my head's going. I'm like, "Okay, I just gotta figure out how to get this paid off." And then I'm talking to the attorney that's selling this property, and he made it seem like, "Hey, I can't tell you too much, but like, even if you pay," because one of the verbiage they said is the arrears were never paid. And so now I'm focusing on these arrears that where Old Republic Title, who's a national title
Big
company.
ass company. Yeah.
Exactly. They are the title company used in this. And I have a line item in my settlement statement paying arrears. So I'm like, what the hell is going on? And so now I'm talking to the attorney. He's like, hey, listen, even if you do pay another 20 grand, which I already lost 180 grand. So I'm hesitant to pay this 20 grand in addition to what I already paid in arrears. My attorney was pretty much useless at this point because most attorneys don't know seller finance, sub-2, all these
Yeah.
gray areas, which I didn't know. I just was leaning on them at one point. And so then they're like, hey, even if you do pay these arrears, we can still foreclose on you because there's a deed restriction that says only low income can live here.
There was a deed restriction. Is this like kind of in the what neighborhood in Salt Lake was this? It was in the hood. Dude, that is like the craziest thing. And we're not done with the story yet, ladies and gentlemen. But I'm just as we're unpacking this. Because like I said, I've done these deals before. I've done every deal except for a lease option. But basically, like you said, when you close on a sub-2 deal, it'll say subject to taking mortgage over. If there's arrears, you get a letter from the bank that says, okay, in order to catch this loan up to good standing, X amount of dollars needs to get paid. And at closing, it gets paid and the loan goes back into good standing. It's pretty black and white. So then they're saying they never got the arrear money. Where did that go?
And I still don't know the answer to that.
Who
Like
was the
that's
lender on this?
the lender was, well, NeighborWorks is like the entity who
Yeah.
works with servicers. And it was Amerinet, if I remember right.
It was that loan probably got sold off a ton. It probably
Exactly, right? Like, the entity was NeighborWorks, and that's who even the servicers were pointing me to.
so with a deed restriction in kind of a lower income part of town, only a low income borrower could own that asset essentially. Was that a law by the city of Salt Lake or was that a law with the loan program?
So from my understanding, it came from the entity on the deed restriction. Cause like to me, they can't say who owns this property. And so that's why I was frustrated. And when my attorney told me that even if I showed up at the auction, investors can't bid on it. So he's like, what's going to happen is it's going to go back to NeighborWorks because like it doesn't sell at auction. Now NeighborWorks is going to have it. And then they're going to find another low income family to take
Buy
over it.
it.
So I don't show up and I was told like if I paid it off with the servicing company, then I could have been okay. And so at one point I'm like trying to do everything I can to get a hold of the seller, but this guy's like nowhere to be found. The listing agent was even related to him and he had like a no contact order with his brother. So they now were in bad standing. I have no idea why. So I'm skip tracing his whole family. I can't get a hold of the guy. And I have 180 grand at stake. Like I'm knocking doors, like I'm trying everything. And I had to have a signed permission to even get a payoff. And now, obviously, like all the lessons learned is like I would have had a POA signed from the get go, a power of attorney, so that I could act on his behalf with the mortgage company. And then obviously the biggest lesson here, don't trust anyone. On top of that is like, you have to watch what loan products you're taking over.
So the loan product was the low income housing, and that was the real root where the bank in that case had all the leverage in the world. Now, my question to you is, was that ever disclosed to you? Can you sue the agent, the wholesaler, the title company? I mean, obviously easier said than done, but it seems like you could probably sue the wholesaler who had a contract he assigned, a realtor who had a fiduciary responsibility, title company could get sued there. Is that something you could even do there? Like, 'cause they're liable if they never disclose that to you, that's a complete liability on their end.
100%. So the title company is ironclad, especially a national company like that. And they have an ironclad document that I signed that's like, we are not responsible for this. And again, I knew there was probably risk with creative finance, but I didn't dig into that. So I was just
Yeah.
like, oh, okay, they're releasing liability. I'm taking a risk. I'm an investor. Move on. So
Yeah.
title company's out. The listing agent has like one transaction in 12 months, according to the MLS today. To me, going after him is more attorney cost than what I could get out of him.
Yeah, it's like you can't squeeze blood out of a stone.
Yeah.
Could you sue the brokerage?
My attorney didn't have good faith in it. I talked to two attorneys, but dude, at the end of this, I was so over it. I've been drained and squeezed like so many angles to it. I
Yeah,
was like, even if I can recoup 80 grand, whatever it is, if that's going to suck more mind space from me over a year, 2 year span, that opportunity cost just isn't
it's
worth it
not
to
worth
me.
it. You might as well just
It's
do more deals, make some more money.
And that's exactly what I did. Like, that's what I didn't get to talk about on Bigger Pockets podcast. Like, my business after this absolutely shifted. I do mostly creative finance. I've done Sub 2. This is my business now. And so a lot of people will watch the video and think I just hate Sub 2 and I'm running the opposite
Yeah.
direction. And that's kind of the vibe that was pulled from it. But there's a massive opportunity with Sub 2. The part that I hate is when risks are not being communicated. So every single time when I have a client, when I'm representing an investor, I'm like, hey, 9 out of 10 deals have an underlying mortgage that I work with. I should say that 90% of my deals now are seller finance, true seller finance.
Where the seller's financing you with no bank.
Exactly. Because I'm a lot more comfortable with that. There's a lot more creativity. The bank kind of puts you in a box. But on the opposite spectrum of that is that 90% of deals available, whether it's on the MLS from wholesalers, 90% of those deals have an underlying mortgage. And so that's what I talk about with my clients. I'm like, hey, listen, we can go the seller finance route and be a lot more patient. You're going to put more money down typically. But like if you're comfortable with these risks, then it opens up our buy box tremendously.
I've always thought they were risky, and I just bought one 2 weeks ago, actually. I'm flipping it, though. It's a short-term deal. The other one I did, it was a flip, so we were out of that thing quickly. And then the other one, I ended up assigning it. I was gonna keep that as a rental, but I ended up assigning that to somebody I really knew, liked, and trusted, and they put it in a trust. They did it the right way, which there's a lot that goes into that. But they're risky deals, and you gotta know what you're doing. And that's the thing where I see people talking about marketing to people who've never done a real estate deal before. They're flat broke. They don't got two dimes to rub together and they're going to go take over someone's mortgage. I don't think so. You got to know what you're doing and you could still get hurt, right? You knew what you were doing and you still got into a deal that was not disclosed to you that ultimately cost you almost $250,000. So I always tell people subject to deals. just because you could buy it subject to doesn't mean it's a deal. It still has to make sense, and you have to know the risks, and you have to understand what is the downside. Like, a lot of these I go on Facebook and I see, like, "Creative finance deal, entry fee, $45,000." I'm like, "45,000? This thing has no equity. Just go to the bank." Like, that doesn't make any sense. You're better off going to the bank. So I think people just kinda drink this Kool-Aid now. But on the owner finance side, I wanna cover that as we wrap the show up here. I mean, I've done them. I've found them kinda hard to do, like, with the owners. A lot of them want a big down payment. Like, I did one last year where I paid market value for the property, did 0% interest on a 5-year balloon, so every payment is principal only, which is nice. What are you doing in Utah to be successful? Are you doing these 0% deals? How are you structuring a lot of these so they work for both parties?
Yeah, that's a great question. So typically my down payment for seller finance has been between like 12 to 15%. There's a benefit there. My acquisition a couple weeks ago, there's this triplex in South Salt Lake. It's a 4.5% interest only. This isn't a home run by any means, but it'll probably be a 10% cash on cash, which is great in today's market. But the reason that the base hit not a home run is because it's a 5-year balloon with an option to extend to 7, and this is why I love seller finance. The option to extend is contingent on if the seller is dead or in hospice. If he's not dead or in hospice, then I can extend another 2 years. So, like, there's so much flexibility
Yeah.
when it's just you and the seller.
That's exactly my plan with this guy on the 5-year note. I'm gonna call him on month 59 and say, "Hey, Dennis, why don't we go another 5 years, man? You've been getting paid from me like clockwork. Why don't we do another 5?" And then at that point, it'll be like paid down so much. You're exactly right. You can get creative with these people and be flexible. Like, if you call a bank and say, "Let's go another 5 years," they're gonna say foreclosure. They're
Exactly.
too big to be able to do that.
And that's what I freaking love your example of your deal with the 0%. I think that's so intriguing. That's what I am trying to find now is like that principal payoff. Like I had one where everyone like boxes their head with banks, right? Like if you've been doing real estate investing, your mind thinks like 30-year AM, 15-year AM,
Yeah, yeah.
amortization for the listeners that aren't aware. And that's like a schedule that the bank creates. But with creative finance, just like you did, there's no rules against it. I put together a deal that was like, here's the payments. The seller needed 4,300 on his rent or on his monthly payments.
Sure.
And the only way that it made sense as a deal is that if 50% of that 4,300 was going towards principal for the life of the loan, which is 15 years. And so at the end of the 15 years, it's like you have 85% equity in this
Yes.
deal, and
Yep.
all you gotta do is break even. Like, obviously, you're gonna want to cash flow, but even if it does break even, the return just from your principal payoff is wild. Like,
That is why I did the deal in Pennsylvania with the guy. And you know the crazy thing about that? The guy who I did the deal with, the seller, was a mortgage banker. He's in the mortgage business and gave me a loan for free. I had to follow up with him for months. It was not easy to get it, but he was stuck on his price, his tenant, ginormous pain in the ass. And I said, "Dennis, listen, I'll give you pretty much market value minus whatever the commission would be. So you would net the same. If you take back a note at principal only payments." And he's like, "Why would I do that?" I said, "You're getting the price you want. You're getting the same amount of monthly cash. Actually, you're getting more than you'd get from the tenant because the tenant wasn't paying your rent. But yeah, he's getting 400 a month first 2 years and then 450 a month for the last 3 years. But it makes $100 a month, if anything. So I don't care about the cash flow. $100 a month isn't going to do anything. But every month the principal's getting paid down. So by the time that note comes due, I think I'll probably owe about 55 or 60,000 on it, and that property right now is worth 110 as we speak. So it's like in, maybe 5 years, it'll be worth 130 or something. So it's like people just hear something on Bigger Pockets or they hear, "Oh, I need to get this." It's like, no, no, no. Like, look at the deal from an equity, look at the cash flow, look at the pay down. I got to cost seg that against my flipping income. The more you know about this stuff, the better equipped you're going to be to make an offer. You know what I mean? Like,
100%.
such a game, it's just like moving pieces around a chessboard.
Yeah, and that's the beauty of it. I love your example because when you ask, "What am I doing to find success in Utah?" I have a toolbox of solutions I can offer sellers. And if you're going out trying to find a flip, The only term that you're negotiating is purchase price. So if I'm going out to the market, think about in today's market, there's so many deals on the MLS.
Buy one right
Well,
now, 100K below list price.
that's amazing. So that's what I'm saying. There are people out there that are trying to sell their home. If they have their home listed on the MLS, they are trying to sell their home.
Yeah,
Now, if you are more educated than the average investor or more educated than the average agent, which is not hard to do, then you can offer solutions to these people. Like if you brought up to someone like, I got a 0% loan, like people are like, why the hell would anyone do that? What you can do, like if you have these tools and you have some sales skills, you get them what they want, you get what you want. This guy has a pain where he doesn't want to deal with the tenant, he doesn't want to deal with the headache of it, and you provide a solution.
exactly. It works for both parties. And then all of a sudden he's signing loan docs for free. No personal guarantee, by the way, because he wanted a PG. And I'm like, dude, listen, I'm going to pay you. I'll show you the fact that I can pay you. I could pay you right now cash if I wanted to. I'm not signing a PG, bro. And here's the thing, you got to be willing to walk away from deals. I was like, Dennis, if you want the F and PG, I'm not buying the damn house. You just said it right, man. If you know what you're doing and you have the tools in the tool belt, you can literally, in any market, be better because you have more knowledge and you have more execution. And like, we obviously spoke about that deal from hell that you went through, but you know how much smarter you got from that, man? That was like a Harvard education in creative finance, you know?
100%.
How did you end up getting on the Bigger Pockets podcast to share that story? Because I mean, that's a big ass podcast. They get like hundreds of thousands of downloads.
Yeah. So it was James Daynard. He was like, people need to hear this.
Did you get blown up after that or what?
Yeah. Like, I wish I could have told the side of the success, like the amount of money I made from the lessons I learned, but it was a little rushed. So it was fine. It was awesome exposure. And here we are now.
Oh,
It'll widen the network and we'll do more deals because of it.
exactly. Well, if people want to follow you and check you out online, what is the best way for people to connect with you?
Yeah. So Instagram and YouTube, that's really what I'm trying to grow. That's where I'm throwing content these days. And it's just the investor Tanner.
Put that in the notes. All right. Well, thanks for being a guest on the show, man. That was a lot of fun.
Of course, brother. We'll stay in touch.